Welcome to IIFL Securities, sir. Could you explain a little bit about the business growth you have experienced recently and what's your business strategy in the short term?
Thank you, Saurav. I think we have published our Q2 results already, and we had a very good growth in terms of portfolio. We grew by YoY 24%, as well as our customer growth is about 1.2%, but that's a pre-write-off. But whereas in the post-write-off, pre-write-off basis, we are about 8.8% growth we had. And then we have disbursement growth of 12.5%, which is one of the best Q2 performance what we have showcased during this second half, this FY 21-22-23. Our NII grew by 39%, PPOP grew by 52%, and then PAT at 176 crores. It's one of the highest in any quarter what we have published so far. So which also including the ROE of 16.1%, what we produced in this quarter, which is actually linking to what we promised. We promised the growth of about AUM growth of about 24 to 25% for the financial year, customer growth of about 12% for the financial year, and then we said that our ROE may be about 18%, as well as ROA may be about 4%. This is what the guidance what we gave, and then our strategy is to ensure that we achieve this guidance what we give to market. And then from a asset quality perspective, also our asset quality has improved largely from the COVID situation last 2 years. Our GNPA stands at 2.17%, whereas our provisioning is more than that, that is 2.46%, and net NPA is just 0.77%. So this is what our current status of the company, and with the capital adequacy of 24.3%. So probably this is quite good momentum for us to achieve the targeted numbers and the promised growth for the year to the stakeholders.
So what did you do differently? Because largely, MFI sector is still recovering and the collection efficiencies are not improved as much. But what did you do differently that these numbers are showing?
See, so always we are a little differentiated business. We give ours is more rural focused. We meet our customers every week. Connectivity of the customers is quite high, and we have a very unique customers. For example, 43% of our customers are unique to us. They are not borrowed from anybody else, and even another 39% are borrowed only one outside other than Grameen. That means almost 82% of them have either with us or few of them with others. And then the rural focused, meeting them every week. If they're not able to pay for a week, they can pay next week. Because it's a weekly payment process, the value they have to pay is very tiny, compared to somebody paying for monthly. So the high relationship, and in the meantime, employees also, we ensure that we have trained our employees very highly customer centric and empathizing with customers. And then we have taken employees only freshers, only from our customers' family, so that they can empathize with them, train them uniquely with them. So highly motivated employees. So customers processes suitable to them, product suitable to them, and then pricing again. We have given a very low pricing compared to market. So all these helped us to manage our collection better. On top of that, what we did is last year when the wave 2 was little high at the time of June, July, August, we believed that we should start out focusing on business. We should not worry even wave 3 comes, because we experienced wave 1, wave 2, and we know how to manage. So we started our businesses completely open. From August on, we started acquiring customers, start dispersing money, start opening branches, start acquiring more employees. So we started focusing business, because we were very confident that we can grow this business despite this somewhat COVID situation. So which helped us to be fast mover and able to build our business more properly, and we come back to normalcy much faster.
What's the strategy going ahead, sir?
So we continue to remain rural, because our view is that rural will be the key for this business. This is collection business. Therefore, you need to be there at the time and the venue and the date what you fixed for collections. So in rural that works fantastically. So employees are trained in such a way that the on-time collection is key, and they're trained in such a way that if there's a difficulty for a customer, handle them carefully with empathy. That we did, and then the replicating the same strong business model what we created, or going to contiguous district, operate deep in that district, then move to next district, repeat the same quality of operation everywhere. That's the fundamentals which you continue to do. What will add to further, because the asset business is a standard business which is well defined, well run, well controlled, replicates on its own, given the raw material. And optimal raw material, keep pushing it goes on actually. So therefore the more focus will be on raw material, which is money, which is money for us, is borrowing for us. So
Right.
to get a stable borrowing, to get a stable long-term borrowing, it's important for having to continue to do the right asset business. Therefore the little more additional focus on making the right liability, while we are quite strong, quite liquidity, and then we have very high ALM positive, everything is fine. But to continue every year, if you go 25%, your borrowing also increases 25%.
Yeah.
So every lender cannot increase 25% every year. So
Yeah.
that means you have to diversify the lending beyond the current lenders. Maybe you have to go beyond the current borders. You may need to go beyond India, and you have to go beyond the current instruments.
Mm.
So therefore, the higher focus is on building liability now. That's a strategy apart from replicating the stable business what we already built.
So what's your current funding mix?
Currently, about 65-70% is domestic banks, and about 15-20% is about domestic non-banking institutions like development banks, NABARD, SIDBI, those kind of institutions, and
Right.
about 10-12% is international borrowing
I
currently.
saw some ESG loan you received from
Yeah,
a group,
yeah, that
right?
is part of international borrowing, which is again, diversification as well as moving towards stable and long-term funding, which is very very important. Therefore, we keep working on this. I think for last 8 years we have been working on this continuously. About 10-12% we always borrowed internationally. So we are scaling up that, in the process of scaling up, which means in the next 2 to 3 years we should be able to scale this to next 20 to 30%. So eventually, that's very very important. So, and in the meantime, you're also working on domestical different instruments to work on.
So what's the cost of fund as of now, and where do you see it?
So our current cost of fund is about 9.1% as of September 30th. So
Right.
of course, cost of borrow got increasing a bit, but probably with various mix what you are operating, international, domestic, and everything, we are able to manage much better. For example, which was about 8.8%. It moved up only by 30 bips in the last 6 months, while repo gone up by 190 bips, correct? 190. So till our operating, cost of borrowing will be only 30 bips. Similarly, marginal cost of borrowing also gone up by only 50 bips because of the mix what we maintained. So therefore, we are able. This is also competitive edge for us to price our customers lower. So therefore, we are able to manage that also. So it may go up little high, but I think it's still manageable. There won't be any stress on our margins.
Okay, now we'll come to your another funding avenue you are availing now, the NCD issue. Could you explain a little bit about the logic and the details of the NCD issue?
Of course, yeah, as I said, it's always intention to improve our liability situation or funding situation, because, as I said, it's a raw material. We need to have optimal. So therefore, adding one more avenue is important. It's one more avenue is going to public. It's again, it's again supports the long-term stable funding. So, and then it's also normally it's a bullet payment at the end of the 24 or 36 or 60 months, which makes very economically sensible borrowing for us. So therefore, we are working on this, just adding one more avenue. Therefore, moving from a what you call almost 30 to 40% of our borrowings should be in such bucket which are stable and long term. So that is the strategy of enhancing the strength to our borrowing. to support the growing asset book. That is the whole strategy. So this avenue will help us by entering to market. This will be a regular source of liability going forward. So currently, maybe initially it may be more institutional towards because we are first time coming to market, but eventually it will be more retail HNA kind of instrument. Therefore, if you put the right matrices, if you're able to perform very well in our own businesses, I think people appreciate, investors appreciate this, and we'll get the benefit of this one more instrument. That is what we are working towards. Details of this is, that the current size is small. While we have approval for 1,500 crores, we are going with the first tranche of 250 crores with the shelf limit of another 250 crores, which means we can go up to 500 crores, and which is the three categories, which is 24 months, 36 months, and 60 months category. 24 months, in the other categories, there is a cumulative as well as monthly interest options also. Interest rate is 9.45% for 24 months bonds and 9.6% for 36 months bonds, and then 10% for what you call 60 months bonds. So effective yield for our largest and the highest was 10.46%. So this is open today, and we'll look for early closer, but date is up to 2nd December. But based on the subscription, we would close early also.
Sir, best wishes for your bond issue, and we hope you get all the subscriptions you want. Thank you very much for sharing your idea, business and growth plans. We'll see you soon, sir.
Thank you very much. Thank you very much. Much appreciated. Thank you.
Thank you, Saurabh sir. Thank you, Udaya sir.
Thank you, Rahul.
Thank you.